Hey everyone, me Kevin here. The Economist released a really awesome paper on what about the possibility, or what would it take, for cryptocurrencies as a whole to go to zero. And in this video, I'll also talk about what I sold and what I bought when it comes to cryptocurrencies. Let's get right into it. And remember, that coupon code on Building Your Wealth does expire tonight. Price goes up tomorrow morning. All right, folks, take a look at this right here. So this is The Economist. I highly respect this magazine. They do a great job. And take a look at the middle of this article. We're just going to look at some of the fun parts here. First, they talk about what could happen if cryptocurrencies evaporated, because when we go to that extreme, then we can kind of see the contagion that it would cause and then potentially work backwards and evaluate, is that even likely to happen? Because it shows us how intertwined cryptocurrencies are already and how they've become and are becoming more intertwined. So take a look at this. The total value erased if cryptocurrencies went to zero is not just the value of the cryptocurrencies, but also the value of crypto firms and exchanges. Think Binance, Coinbase, or other companies that have massive market values outside of crypto market values, but on our stock exchanges, right? But also think about other companies like Square, PayPal, Revolut, Visa. As The Economist says, they would lose chunks of growing, juicy business revenues, which would dent their valuations, and some companies would just go utterly bankrupt, obviously. Think about Hut 8 Mining, for example, as a smaller Canadian miner, right? The contagion would be pretty bad if cryptocurrencies went to zero, because so many companies are involved now, including even to some degree Tesla, who invests in Bitcoin. But let's take a look at this. Others, also take a look at this. Others that have also ridden the crypto boom. NVIDIA, think about those graphic cards to mine Ethereum. Or the ASIC chip makers who are using ASICs to mine Bitcoin. But anyway, contagion could spread through several channels to other assets, both crypto and mainstream. And so they give 3 channels to which a crash could happen, and then they talk about sort of the likelihood, which I'll talk about as well. And I found the 3 channels really interesting. We won't go super deep. I'm not going to read you all of this word for word. We'll give you a little bit of a summary here. So channel number 1 is leverage. The Economist believes that 90% of money invested in Bitcoin is spent on derivative products like swaps, or basically bets on future price fluctuations. That's because estimates show that about 70% of cryptocurrency trading right now is done by institutions who have access to a lot of different derivative products that we don't have options or access to. One really common type would, of course, be an option contract, right? A call or a put. In other words, a way to make a directionally bullish or directionally short bet, bearish bet. Now, they also mention here in The Economist that most of these trades happen on unregulated exchanges, where customers can essentially borrow and borrow more and more money on top of borrowed money, essentially. And this can trigger big margin calls, which honestly, that's some of my those are my favorite moments to invest in crypto, because then when I see crypto prices go down, I know it's not because of the crypto itself, it's because of the overall broader market that's suffering pain. People are getting liquidated because they took out too much leverage. Hopefully it's just the suits like Citadel or whoever's investing. And retail are buying the dip, hopefully. But anyway, now margin calls in cryptocurrencies can get exacerbated by leverage. And they mention here that it's hard to tell exactly how much a leverage there is because there isn't as much transparency in the cryptocurrency market. And I understand there are some weird guises in the typical financial markets as well. Some weird leverage things that go on that we don't even know about. Some weird arcane products, certainly ones that have led to the 2008 Great Recession. The cryptocurrency hasn't done that to us yet. But then, beyond debt and margin, essentially, and margin calls, they mention that stablecoin FUD again, right? The potential that stablecoins break the buck aren't actually worth $1, and when they're not worth $1, people seek to redeem their stablecoins, potentially not being aware that if they're signing up for interest on their stablecoins, they've now lent that money out, and those stablecoins could be lent out 10, 20 different times, and you could potentially see a collapse in confidence or the breaking of the buck of stablecoins, and then ultimately selling of crypto. And then if crypto is sold off because, let's say, Tether falls apart, the good old Tether FUD, then all of a sudden you get those margin calls and you have these 2 channels compounding on each other. And so that gives you kind of just a brief summary of that. And then, of course, there is another potential reason for a sale, and that is what they call a cryptocalypse, which is kind of like an apocalypse, like the end of sentiment around crypto. So The Economist is saying, like, look, you'd have massive contagion outside the cryptocurrency world if crypto went to zero. You'd also have 3 channels to get there. One is leverage, 2 is stable coins, but then also a loss of sentiment. And this is where a lot of folks who question cryptocurrency say, hey, the only thing that actually props up the value of cryptos is potentially sentiment. That's what some people argue, right? They're like, where are the earnings, right? Where's the fundamental? And this is where obviously crypto fans counter generally back with store value or utility of some sort or purpose of some sort, right? But they make this interesting argument here that one of the reasons people are so into crypto is potentially because of low interest rates leading to lower yields in the market, leading people to go towards more exotic assets like cryptocurrencies. Found that kind of an interesting argument. And so this creates the idea that you could have these 3 channels that actually relate to each other. And so this is where The Economist really paints this potential picture of, wait a minute, you have these 3 channels to see a collapse in cryptocurrency. If you have a loss of sentiment, you could break the buck on stablecoins, and then you could have this leverage disaster, and cryptocurrency could essentially go to zero as the exotic asset, as they call it, exotic asset, evaporates. Now, to the extent of this actually happens, they don't give an opinion, but I will. What I think is because of the vested interests by so many companies, both publicly traded, off-market, DeFi, institutional investors, non-institutional investors, retail, I do not see cryptocurrency going to zero. But I do see cryptocurrency as a trading opportunity in some cases, and in other cases, I see it as a hodl opportunity. And now, what about what you see regarding me selling my crypto? Yes, I did sell my crypto, but I have bought it back. I sold my crypto as a trade during the peak FUD of the Evergrande crisis. I sold and then I rebought. I'm bullish on crypto in 2022, but I want to be fair about my expectations. I do think that if we do get inflection points to the downside and CPI inflation, which I think way understates inflation anyway, then it is possible we could see some sideways trading on cryptocurrencies, at least until we get out of all this China FUD and all this nonsense garbage, which in my opinion is barely worth covering. It's so redundant at this point. Whatever, China, see you later. We'll do crypto without you. And I think 2022 is the beginning of where we go more mainstream with cryptocurrency. So I'm personally very excited, and I wanted to share this if crypto goes to zero story with you because I thought it was kind of interesting, the 3 channels they gave, and I don't believe they're likely, but they are right. Those 3 things do heavily affect at least the prices that we see in the fluctuations in the cryptocurrency market. So anyway, folks, thank you so much for watching this video, and folks, we'll see you in the next one. Bye.